Sinjuri, nsemmilkom nilqakom għal-programm Flusek. Fil-programm tal-lum sa nagħtu ħarsa lejn riżultati finanzjarji ta' żewġ banek lokali, HSBC Bank Malta PLC u APS Bank. Ser nibdew sabiex nagħtu ħarsa lejn riżultati finanzjarji ta' HSBC ma' żewġ mistieden tagħna, Geoffrey Fichte, kap eżekuttiv tal-bank, u Cilia, Chief Financial Officer. Charlotte, Geoffrey, welcome to Flusek once again.
Thank you.
I was just informing our viewers that we're going to discuss the interim financial results of HSBC Bank Malta for the first 6 months ending June 2024. So, Geoffrey, first question for you. HSBC Bank Malta announced a profit before tax of 78.6 million compared to a profit before tax of 59.3 million for the first half of the same period in 2023. To what do you attribute this increase in profits, and is it in line with the bank's budgets?
Thank you. Well, thanks for the time. It's nice to be here. You're correct. So HSBC Bank Malta published a first half profit before tax, which was a record amount. It was an increase of 33% over the previous year. And there's several components to that. Namely, it's a growth in revenue. So we're seeing an increase in revenue across all of our businesses, both in the bank, personal and commercial banking, but also in our insurance and asset management companies as well. So a strong growth in revenues growing by 20%. We're also demonstrating a very robust management of risk. So the provisions that we create for our loan portfolio, actually we had releases, so a very strong credit quality of our loan book, which is very good as well. And finally, we're spending more on transforming, we're investing more in our bank than ever before, aligned to our strategic priorities of our people, where we've signed a multi-year collective agreement. And also we're investing in technology and in digital to make our bank simpler, easier for customers. And finally, we're also investing in premises such as new ATMs to make life easier for customers as well.
Charlotte, as Geoffrey was saying, the bank reported an increase in revenue of 20% when compared always to the first half of 2023. What's contributed to this increase, and is it likely to be maintained if interests fall further in the Eurozone?
Yes, we had an increase in revenue of 20%, which is equivalent to 21.4 million. The increase is mainly attributable to the interest rates, which I'll talk about in a minute. However, we had progress, we had growth in all revenue streams. So we had an increase in the insurance income, whereby we increased our income from our insurance subsidiary of 2.6 million. We also had higher customer transactions, which resulted in higher net fee income, but also higher foreign exchange income. In fact, we had about 34% increase in our trading income first half versus first half last year. But as I mentioned, the biggest increase is coming from the net interest income, where we've seen an increase of 17 million, which I attribute to two factors. First of all, the interest rate environment was different. So if you look at the average ECB overnight rate as a benchmark in 2024, it was about 3.98%, while in 2023 it was 2.75%. Because the bank has a healthy liquidity from our deposits, obviously we will be investing at higher rates, which contributed to the increase in interest. But we also maintained a higher average level of deposits. So if one looks at not just the deposits at a point in time, but the average deposits both on the retail as well as the corporate side, comparing 6 months to the 6 months this year versus 6 months last year, we had higher volumes. In terms of your question whether we will be impacted, yes, we would be impacted by a decrease in interest rates. We've been hedging or changing our investment strategy to invest more in the long term, so shifting some investment from overnight or short term to longer term to stabilize the interest in the future, but we remain sensitive to interest rates.
With regards to costs, Charlotte, they have continued to increase in the first half of 2024, always when compared to last year. What were, do you think, the main factors which led to this increase, and how is the bank trying to control costs in general?
Yes, we had actually an increase of 6.6 million when it comes to cost. There were some one-offs in both years, but if I leave those aside, I mean the increase, which give or take they do offset. The increase is mainly driven, as Geoffrey was referring to the investment in technology. We have a new mortgage system. We continue to improve our credit card system. We actually we have purchased and we will be changing our ATMs across the island. So obviously that means that despite some of the cost is capitalized, some is taken to the P&L, and then you have the amortization of those investments. That is one part of the increase in cost. We've also signed a collective agreement at the beginning of the year, a 3-year collective agreement, giving better salaries as well as allowances to our staff, which contributed to increase in cost. And the last piece is the premises. So we've actually invested heavily in the premises in Ormi and across the different branches, and that costs money. So obviously we do make sure that we maintain our costs at the minimum level, but at the same time we need to invest, especially in technology, and there will be also regulatory requirements that we need to make sure that we abide to.
Geoffrey, loans to customers and deposits were slightly lower when compared to year-end figures of 2023, given that the Maltese economy is still considered to be very resilient. How do you link these two factors?
So our deposits, if you look at average deposit balances this year versus the previous year, they're actually up. And that reflects that we have more customers, we have new customers, and we have increased transactions. So we're very pleased with the growth in deposits on an average basis. Our loans were slightly down, and there, I think it reflects that we have a very large diversified loan book, and it's natural that you have some customers, paying off loans as expected through the normal course of business. You have certain level of amortization, but we've also given a lot of new loans, and we're very much open for business in expanding our risk appetite to include more sectors. And I'm very pleased that we have quite a healthy pipeline of new business, which I think reflects, to your point, the fact that the Maltese economy is very resilient. It's quite diversified, and so we're very positive on the growth prospects for Malta.
And with regards to deposits, as I was discussing with Charlotte, interest rates in the Eurozone have started to fall. How has this impacted the bank in terms of lower rates to come in the years ahead with regards to deposits?
So yes, we're seeing across the Eurozone the commencement already of an easing cycle. We've already seen, last month, in June, the first 25 basis point cut, and there's a few more cuts expected, between over the next year and a half. That said, no one's expecting rates to return to, the negative or zero territories that they were in the past. So despite this quite volatile movement in rates across Europe, over the past 2 years, our deposit base has demonstrated to be incredibly resilient and sticky. And I think that reflects, the strong nature of our brand, our customer service. We have quite a large diversified customer base, and we're very liquid, and we'll continue to support customers no matter the level of interest rates that exist. Also, there's other options such as wealth management and other investment products.
Charlotte, the bank proposing the payment of an interim dividend, how does this compare with previous interim payments in the past?
Yes, it is actually the highest dividend in the last 10 years. So the 10 cents per share, to have that level, you need to go back to 2013, whereby we paid the same dividend. Coincidentally, even in the interim of 2012, we had paid 10 cents per share. So you need to go back some years to get to that level. The reason why we can afford to do it is because of the strong capital position. We have a capital ratio, a Tier 1 ratio of 21.1% compared to 20.6% that we reported as of 31st December 2023. So there is an improvement there, and obviously at the back of the record results that we've published. So yes, we're very pleased to be able to reward our shareholders with a good dividend.
Geoffrey, finally, the bank celebrates its 25th anniversary in Malta this year. What is your outlook for the years ahead for the bank, which is operating in a more competitive environment than when you had started out 25 years ago?
So HSBC is very proud of having celebrated this important milestone. And for me, it was a real honor to be able to celebrate with our customers and with my colleagues. And it's an important moment in our history, at a time which we're renewing our commitment with customers to support them for their future needs. And we're also rewarding our shareholders with this, large cash dividend, the highest in 10 years. And so we're very positive about the future, and we continue to work hard to benefit our customers, to benefit our shareholders and the wider society.
Thank you very much, Geoffrey and Charlotte, for being with us today, and I augur you continued success for the bank.
Thank you very much.
Ser nagħmlu waqfa qasira ta' ftit minuti għar-riklami, ibqgħu magħna.